part one, we learned about MBO data, where it comes from, what it is, why it's difficult to use. It's the most granular data set emitted by the exchange. What we're going to do now is begin the analysis with a tour of the single order graphic so we can understand now the information that's presented here. So this is a Dec-Jan spread book from October 16th. This is the date backwards. This is our instrument that we've selected that defines the central limit order book for that date. And this is the order ID. This is our order of interest. And the chart displays all relevant information to our order of interest, market by order data, implied quotes, and trades. So let's look at the legend very quickly. This should be pretty self-explanatory. This particular order book has very low quantities of implieds. So you can see them here. They're right there, that brick. Red on the offer and this indigo down on the bid. These are sort of the core pieces here that need a little bit of explaining. So the lime green is our order of interest traversing the Qs within the price levels. And our trades are these yellow bars. Of particular interest on the trade side is that they have the color yellow has some transparency to it. So when the trades are overlaid upon all of the MBO data, you can see, in this case, this, say, quantity here overlaps our order of interest, and that was matched to the resting available liquidity for our order of interest. Let's look at the prices. Okay, so our order of interest is 131 offered. I guess the kind of unusual part of the price is that it's a band. It is not a tick mark. So this is used so that the Q inside of the Q can be displayed. Moving over here now, let's look at our element info. So each one of these little rectangles here is a message element. And as I move over them, you can see in the element info box in the upper right hand side, all the numbers are changing, times are changing, sequence numbers are changing, prices are changing. So you can hover over any particular element and get all the information on it. So let's look at our order of interest. It comes on at 1213.49. It's offered at 131. The order ID matches the order ID in the title. That's good. And its Q position is 130 behind the best offered order, which is down here when it comes on the book. And the best offered order is one lot at that time. Now, when you look at if you look at trades, the order ID is 0. It has no order ID. It has no Q position. It's 0. It does tell you how many lots were traded. And there is an assigned order ID to the implieds, these gigantic number of like 7 quadrillion, whatever. that's used to position the implieds at the back of the queue. Liquidity is always taken directly off the book first, and then it's taken from the implieds. Moving to a little bit more static information, we have the order of interest stats. The order of interest stats. So the order comes on right here. It came on at 12:13:49 p.m. on October 16th. And it lived for 850 seconds until 12:27:59. Or 14 minutes and 10 seconds. It came as an 131 offered for a quantity of 64, which we already saw when we used the element info to hover over that first order of interest bar. And it went out with 20 remaining, so it was not completely filled. The total quantity filled, obviously 64 minus 20 is 44. There are no slices that are renewing and going to the back of the queue. It's not an iceberg, and it was put passively on the back of the queue when it was new. It filled almost 69% of the initial resting order. Now these here, for our buy-side friends who look at TCA, this is the range of all the trades that occurred within the lifespan or the order of interests interval on the book, and it traded from 132s to 131s. The orders weighted average fill price was, of course, 131. It's purely a passive order, about as simple as you can get. It's just resting right there. But you can see that there is a number of trades that hit 132s. And by not having a sense of urgency and becoming aggressive and resting during the order interval, it beat the VWAP by 0.7 ticks. If that was negative, it would be worse than. And lastly, we have the overall session stats. So the first trade after the open at 9 in the morning Eastern was 133s at 133s, and the last trade was 131s before the 2:30 close. And for the entire session, the high was 127 and the session low was 141. Just some basic information. All kinds of metrics can be calculated and included on this chart with very little effort. This is a base set to help us understand what's going on. Now, I want to talk about the x-axis down here because this is an unusual feature. One of the challenges in displaying information about MBO data is that it can become very, very large. So what this is a filtered set of all of the events that occurred on the order book that affected our order of interest. Consequently, each one of these bars or an increment here, so if we look at increment 1, increment 2, and so forth, increment 3, those are not bins. This is not a time series. These are not 1-minute bins, 5-minute bins, 10-second bins, 1-second bins, 1/10 of a second bins. They are a sequence of sets of events that impacted our order of interest. This feature allows the high fidelity display of all the information that is relevant to our order of interest on a computer display. You are limited by the number of pixels, and it's not hard to exceed them. So by doing it in this sequential manner, no relevant information is lost, and we can see it. It's revealed. The bars here represent the delta T from one sequence ID set of events to the next. So if you see a larger rectangle, that means there's more time from this sequence set to the next sequence set. I think now we can talk a little bit about this simple order and just sort of qualitatively make some observations. So I like the order because it expresses no tremendous sense of urgency. It is purely passive, so we're not losing ticks to aggressive behavior. And it rests and gains 44 lots of fill. It opened at 12:13, which is an interesting time of day to select. So by putting it on during the midday when the liquidity is low, you can effectively reduce your queue position. So we saw here, in looking at the first entry, when it was brand new, it was 130 lots behind. So if you had entered it, say, at 10 o'clock in the morning, you very well may have been passive at 500 lots behind. So you improve your queue position, but it has it's a double-edged sword. Because perhaps you can have that improvement, but then again, the liquidity that's available is thinner, so it's likely to take a longer amount of time for you to get filled. I do like the fact that 12:13 is towards the end of the midday section of the session. And that's good because you want to take advantage of this. And then perhaps as it transitions through 12:30, although it was pulled before it was completely filled, the activity starts to pick up. So if you time it right, you can get good queue position and then pick up the liquidity over the coming minutes. That's it for the tour. I hope you liked it. For this second graphic, I decided to stay on the same book from the same day and just pick a different order with a different quantity and time of day. When you first look at this single order graphic, what you want to do is start here. This is going to give you a snapshot of the parameters or the stats that are associated with this particular order of interest, 78549637451. And in looking at it, we see it opened at 9:30. It was a busy time of day. Closed at 9:51, and its lifetime or interval on the book was 22 minutes and 32 seconds. It's 133 bid for 500, and it came in at 133, and it went out at 132. Total quantity filled was 500. So this is a case where there was no iceberg, there was no slicing, which is good on a spread book to maintain queue position. And It also entered the book as a new order aggressively in a pretty, what I would call a dramatic way. It lifted 133s and it lifted whatever was at 132, and then it rested with its remaining quantity. So let's show you another feature of the graphic. You can pan and you can zoom, and all of the axes and price bands go along with it. That's a little bit too much. In order to do so, you use your mouse in a black area, an unfilled area, and the reason why you do that is because the areas with the elements are tied to the element info box at the top here. So what we have is an order for 500 that is put on the book at 132 bid. The challenge was that the market was 134 at 133 when they did so. So they instantly lost a tick, albeit for a small quantity. So let's kind of look at these different pieces here on the entry. And so when I'm talking about this and the numerical data that's associated with these various elements and bars here on the left, look over here to the element info, please. That's the reference point. So it comes on the book at 132 and blows through 133's 10 lots at 133, and then it lifts 132s for 109 lots, and then rests the remainder of 381 lots on the book 132 bid. So this entry moved the market. This is a case where essentially the person gave up 2 ticks, because here was the market and they moved it all the way to 132 bid. I don't think that's a good practice. One thing you will find, and this is interesting. It depends on how you measure your TCA. Because if you measure it over the interval of the life of an order and its fills, you wouldn't pick up on the fact that when it was entered, it blew through these price levels and the actual market was 134 at 133. And the way that it entered made it 132 at 131 and had that impact on the market. So there's an argument, I guess, from a TCA standpoint, that instead of calculating the VWAPs for the order interval, it should be extended both to pre and post order interval lifetime segments. Subject for a different video. One of the things that kind of jumps out at you is that the size that's left on the book of this 381 lots, I'm looking at that element info over there to remind myself of how many that is much larger than anything else resting on the book. It's certainly going to attract some attention, although this is a low volatility stayed book. So we already have, by the time we have a resting order, we've taken out a third of the quantity that we wanted to get filled. We rest, we rest, we rest, and we are number one in the queue. That is the advantage of becoming the aggressor and blowing through the price levels, is when you do come to rest, you're number one. So all of this is an expression of urgency, and as I said, urgency is the enemy. But at times it's unavoidable. You have to act for whatever reason it may be. The market actually moved away from us here, perhaps in quick response to the size. Likewise, it does so later on in the order's life. The book has moved away from it. The best bid offer has moved away from it. But good that they continued to rest and were not so urgent that they decided to jump price. And eventually, somebody comes in and whacks the 132s and takes them out. It took them 22 minutes and 32 seconds during a busy time of the day. And that's about all I have to say about this particular order. Fairly simple order. The variation on the theme here was this aggressive order. Now, this order of interest is my favorite of all time because it was my first. It's the first time that I was actually graphically able to interpret an order, and I picked this one. Sort of randomly with a little bit of logic. So this is actually from August 28th, and this is an Oknovi natural gas spread. Can you tell I like natural gas? I do. It has a couple additional characteristics here. You are probably starting to get the hang of it. The first thing that we're going to do is go over here to our order of interest and orient ourselves to the basic information about this particular order. So it was opened at 10:50, closed at 10:56, was around for 6 minutes. 245 offered with an opening quantity of 20. And it was filled for 40. So that's pretty much a dead giveaway that it's an iceberg. It also had an aggressive entry. And it was completely filled because there was no refresh and deletion of any quantities at the end. That's how you can tell that. This is all built into the MarketsAI Program Library. This particular order traded between 246 and 245 for its lifetime, 6 minutes. And it had a VWAP of 245 for the order. And the book VWAP was 245.25 for a betterment of a quarter tick. I would say that anytime you have an aggressive order like this, as a means of entering an order book, you should probably deduct about a tick from this betterment number. This order has some problems. I'll show you why. First is the aggressive entry onto the book. Second is it's an iceberg. So let's use our element info to investigate this a little bit. So when it comes in, it trades 19 lots on entry and then leaves one lot. Now it's green and resting. One lot is resting at 245. Meanwhile, everything is getting hit and we're not getting filled. Finally, somebody lifts our one lot that's been resting, and what goes on the back of the book? 2 lots. And you can note it is at the back of the book. The only thing behind it is the implied offer at the same price level. So moving through this, if you take a peek at the initial 19 and the 1, you add those together, it's 20, and then you're getting 2 lot slices being put on. So this was put at a 2 lot slice iceberg for some quantity. As we step through it, we don't know what the ultimate quantity is. Goes to the back of the book and moves through the queue and gets lifted way out here. You can think of the alternative. This order could have been put on at whatever its total quantity was, which in the end we do know that the total quantity was 40 that got filled, and yes, it was filled completely because it was taken off with 0 quantity left. This total quantity of 40, they could have just put this on at 40 and became aggressive, and then instead of leaving 1 lot here, they could have left 21 lots. And 21 lots is not a quantity strange to this book. This is an example of people trying to hide away from nothing and getting in their own way. So here on the bid at 246 is a quantity of 49 lots. So it would not be a big deal to put that size kind of quantity on there. There's nothing particularly unusual about it. Thankfully for the trader, the liquidity dries up somewhat. And when they put their next iceberg slice on for 2 lots, and they get lifted for 1 and leave 1, lifted for 1 and go to the back of the queue, and so on and so forth. So what this does to the fills by having these 2 slices, these 2 lot slices go to the back of the book all the time, is extend what can be called execution time horizon risk. The longer an order needs to stay on a book to get filled, and this is the queuing problem, the more likely it is that it won't be. So you have a 50% chance, say, of the price going your way and running right through you, or it's going to move away. While the activity of the best bid offer is on at your price level that you want to get filled at, you want to do whatever you can to get filled before it does get away. So you have a 50% chance that you just won't get filled. And that's the risk that you run with time horizon exposure. What I'm trying to say is that this order probably could have gotten executed in less than a minute instead of 6. And there would have had been less exposure. Just to recap, there are multiple things that I consider to be problematic with this order. You have the aggressive entry here. You have an iceberg that is in 2 lot slices that exposes the order to extended time interval to get filled. They ignored that the size of their total desired fill of 40 was no big deal to accomplish. I would be talking with whoever did this, whether it was a broker or a trader, to say why. There are times when it's useful to use an iceberg on a spread book, but they're few and far between, and they're specialized. It has to do with liquidity. When can the fact that you have an iceberg help you to perhaps withhold information from the market on this book, and at the same time not prevent you from getting filled because you're going to the back of the queue all the time? And there are occasions when there is only implied liquidity on the best bid offer. That's one of them. That's a little secret for you. Our next order is on a RBOB gasoline spread book from our favorite date of October 21st for no reason at all. And I think you'll appreciate the variation here. Because liquidity on RBOB is much thinner than it is on crude and much thinner than it is on natural gas, we actually have some volatility within the book during the order's lifetime. So this one was opened at 2:05 p.m. Eastern, and it was closed out at 2:38. So it was around for 32 minutes. It was initially 12 bid for an opening quantity of 2, and it went out at 13 bid. Total quantity filled was 98. You will find that there's a large number of just not 100, just not 50 order quantities. So if you're thinking that this was really a 100 lot order and there's an error, there isn't one. People do that so that they beat the assumptions by algos. It's an iceberg on a spread book. So let's see how it performed. But it didn't come in aggressively. That's a plus. So there's a little some patience. And it was 100% filled. I know that to be true because it certainly was hit through for far more than just its order. And it shows a betterment of over a tick. And I believe that it is. This order comes in with an opening quantity of 2. And you can see the 2 lots sort of fits in with the best bid offer quantities. And so it's comfortable there, meaning it's not exaggerated like some big quantity. So the market is racing away, if you can call that racing, moving away from the resting order. We went from 12 to 13 bid to snug up a little bit closer, and the market kept moving away from it. When you see this without a trade, what that means here is that other people have pulled their orders or reduced their quantities, hence improving the Q position of our order of interest. This was the improvement here by 1 tick. This was the patience, the lack of urgency that let them rest at the improved 13s without chasing the market. And then finally, we're smacked at the end, and whatever quantities we had left in the tank and slices of our iceberg gets hit and we're taken out. This is a good sized trade. Somebody really laid it on there. They wanted to sell 13s in a bad way. 49 lots. So overall, just as a commentary, I thought this was an excellently executed order on an interesting order book because of the RBOB's volatility in a spread book. And this is a good application of an iceberg to sort of fit in with the overall characteristics of the order book itself. For our last order of interest, I thought I would use an outright crude book so that we could observe volatility and what effect it had on this particular order execution. So from our favorite date of October 16th, for no reason at all, we're going to pick this order here, ending in 37.92 for D's crude. And I guess if you look globally at the chart, you can really see the movement, sort of with the underlying tone of a plain old line chart of trades, obviously with much more detail. So, as always, here we do. We come over to our order of interest stats. So this came on the book at 8:34 p.m. and went off at 9:07 p.m. Likely an Asian trader on at least energy commodities, somewhat commodities in general, but specifically energy commodities. There's still a lot of manual trading that's done. It's not all algos, although the liquidity providers certainly use algos. But some of these larger orders are just manually done. So it took 32 minutes to fill 44 lots. It was both an iceberg and it entered aggressively, and it was filled 100%. So the trading range was pretty wide, 10 ticks wide for the interval range. The orders weighted average fill price was 41.20. The VWAP for the same interval was 41.24. So we had a close to 5-tick betterment of the VWAP for the orders interval. Not bad. Our next step is to take a look at the entry. When you have charts or graphics of this complexity, you can see we have 163,000 individual little rectangles representing quantities at all these different price levels in their queues. There's a lot of calculation that's going on. So when you use the pan and zoom functions on a complex graphic like this, it's not very smooth. It works, it's just not very smooth. So we want to look here. So our order came in aggressively. You already know I'm not a fan of aggressive entries. I think it's a little bit abusive because it's taking advantage of the way that many people calculate their VWAP order intervals. One of the most consistent and widespread failings of traders is that they rush things. If you don't need to rush something, unless there's a good reason to, don't. We come on aggressively to get on the book, and it's an iceberg. So to start with, I don't really like how this was entered. However, it's made up for. So what we come on with is an opening quantity of 8 lots. Let's take a look at that. There are 6 lots, and then it left 2. It took the 6 lots that were available to it and then rested with its remaining quantity of 2. It gets filled, then another slice of 2 lots is put on the back of the queue. Queue position 6, not too bad. And then it just sits. Market's going up. The market starts going up and away. Jumps around between 41.27s and 41.30s for a little bit. Comes back down to 41.23s. This is the volatility of a prompt crude book in performance. Our player here just stays firm. They're well aware that the volatility on this book can bring it home. Now, from a trading perspective, and you need a little bit larger view of the entire order book over a longer period of time, but if you get in sync with the volatility that's moving through the market, you can have a relatively high confidence level that it will return. And this person ended up showing a betterment of close to 5 ticks over the VWAP for the order interval. What I don't like is that it took them a half an hour to get filled for 44 lots. And I wasn't a fan of the aggressive entry. The liquidity was so thin, you should maybe seen it. But I will say this, it never went below 41.20 and they got completely filled. There's a way to tell that orders get completely filled because after a trade event occurs, there's an MBO message that updates the quantities if the order was involved in the trade, was part of the match. And when the quantities are equal between the match and the MBO entry on deletion, that means that it was completely filled. And if it's not, you can't tell what the fill percentage is of an iceberg if it's just taken off the book with remaining slices left. And that concludes our first pass set of more qualitative than quantitative analysis of MBO data. The hope of the presentation here of this video is that you can, for the first time, actually see the information that's available to you and how useful it is. I'll add, too, that for liquidity providers or market makers, frequently you have layering going on within an order book. So you have various orders at different price levels working at the same time. And I just thought it was presumptuous. It would have been presumptuous on my part to come up with some set of orders to create a layer. My point is, if you're layering and you want to be able to see all of your orders at the same time, not just a single order, that can be accomplished. I hope that you enjoyed part 1 and part 2 of the series, and that you give us a call, contact us, leave questions here, however you like. This is powerful stuff. This is the ability to tune your order performance in a way that's never been done before, as far as I know. So thank you again.